Okay, welcome everybody. This is the second video that I'm putting out in YouTube in regards to how to get started in trading. In the first video, which I'll leave a little tag up there or a little link for the first video, we talked about the three things I wish someone would have told me before I got started in day trading, okay? So the third thing was I wish somebody would have told me to just start trading futures. Avoid everything else. Just start trading futures. Okay. And what are futures? So in this video, I want to show you a little bit my way, right? Simplify. I don't want to get into the long term that it's a derivative of no. I like to simplify things so that people understand what I'm talking about. So what are futures and what types of futures are there, right? Or what types of futures do we trade? So future is just a contract. They're contracts. They call them derivatives, but they're contracts that you pretty much buy. And in those future contracts, they have an expiration date. These usually, depending on the type of future you choose, they expire at a certain time. But what we do is we day trade those future contracts. And based on the contract that we buy, we're able to either, make money or lose money because it's also a risk in this. So let me show you the types of futures that exist or that we can buy. And I'm also going to show you the future contracts that we actually trade, that I teach how to trade, so that we only focus on one of them, okay? But let me at least show you an example of a few. I'm going to go ahead and share my screen. Let me go ahead and do that here. All right, so you guys should be seeing this. So the types of futures trading that exist are stock futures trading, right, where you can pretty much trade future stocks. You can also trade commodity futures, which are gold, corn, oil, chocolate, coffee, things like that. And then you can also trade index futures. Now, I personally, in this video, will recommend to trade index futures trading. We trade both NASDAQ 100 index futures and S&P 500. For the students that I currently have that have been with me for a while, right? More than 4 years, they trade both because they have the experience. But for someone like yourself, because you landed on this video because you wanted to learn how to get started in trading, I would recommend trading the S&P 500 futures. So let me explain how you actually make money in these index trading futures. We're not going to concentrate on anything else. We're going to be a master of one. So a master of one meaning we're only going to focus on the S&P 500 futures contracts, right? So I'm going to show you now the contracts here. And I'm going to give you the example with the only one you should be focusing on, especially because you're so new. You're so new to trading. So there's two types of futures contracts for the S&P 500. For those of you that don't know what the S&P 500 is the top 500 companies in the US stock market. It's a basket. So whenever someone talks to you about an index, just know that it's a basket of companies. In that basket, there's Apple, Tesla, Microsoft, the top Fortune 500 companies, right? So that's what we're actually trading. We're trading that basket of 500 companies. Now, inside of that basket of 500 companies, we're trading the future side of it. We're not trading the basket itself. We're trading the futures contracts. And there's two types of contracts. There's the E-mini futures and there's the micro E-mini futures. Here's a free tip. I usually teach this on my one-on-one coaching, or if you take my boot camp, or if you join the live sessions that I also have. I invite you to visit www.daytradingwolf.com for more information on if you want to learn personally from me how to trade. But here's a free one, right? I'm teaching you this on YouTube, at least this part, for free. So here's the free class on futures. So there's two types of contracts. If you are a new trader and you're new to futures, I right off the bat, I'm telling you, do not trade this contract. The mini, you're not trading that contract. So forget it. You're not trading that one. The one you will trade is the micro E mini. And if you're using a platform already, whatever it is, TradingView, Thinkorswim, you're using a prop firm to trade in their platform, the way you find the symbol for this contract, because everything has a symbol that you look it up, it's the MES, okay? MES. Remember that name, MES. Now, how do you actually make money on this? So this is an example. Let's say right here what you're looking at is the price. Let's say this is the hypothetical price of the S&P 500. It's not at 2,800. It's actually like at 5,000. But the way you make money in this is very simple. When you purchase one contract, and in this case, remember, you're going to be purchasing the MES. When you purchase one contract, that gives you a right. You hold a contract that gives you the right that for every $1 move in the price of the S&P 500, now the index, right? The price of the index future, if it goes from 2,800 to 2,801, this $1 move right here, if you purchase one contract and you own one contract, you just made $5 if you said that the market was going to go up. If you said the market was going to go down from this 2,800 and it went up, you just lost $5. So that $1 move in price is what's going to tell you how much money, if you own one contract, you made. So simple math again. If you own two contracts instead of one, because I want to make this simple for you guys to understand. If you own two contracts and this actually moved the same, move this, from, say it moved like this, it moved up and you bought here, right? You said, hey, at the price of 2,800, I want to buy and say that this market is going to go up. So that you're betting, because in a way it's a bet, right? You're betting that it's going to go up from that price. If you own one contract, you made $5. If you own two contracts, simple math again, you don't need to be a rocket scientist for this, right? You own two contracts, is 2 times 5. You just made $10. So on this $1 move, we just made whatever. If you have one or two contracts, you either made $5 or you made $10. That $1 move, to all the students that I have, we don't call it $1. Oh, hey, the NASDAQ went up $1, $2. No. Or the S&P 500 went up. No, we call it points. So instead of calling it dollars, we're going to call it points. So remember that. The movement of the S&P 500, the index itself, we call it, or we go by, points. Some professionals call it handles. One handle is the same thing as 1 point. And what that means is 2,800 to 2,801. If it goes up, here's where it gets pretty cool, right? If it goes up 2 points, those $2 in price, or two handles, see, $2, 2 points, two handles is the same concept, is the same thing. It's just depending on how long you've been trading, you give it that, that more professional term, which is a handle, or you can just call it points. I like to simplify things. Points. That 2 points, if you had one contract, you made $10, because now you made 2 points on one contract that pays you $5 for every point. If you had two contracts, you just made from 2,800 to 2,802, you just made $20, because two contracts in 1 point make you $10. But if it moved 2 points, then you just made $20. I hope I didn't confuse you. It's simple math. The more contracts you add, again, the more you're going to make. If you had 3 contracts, give you that example again, right? 3 contracts, you're always going to times those 3 contracts, right? So times what? Times 5, it would equal $15. Okay, makes sense? Now, why am I telling you guys to trade the micro instead of the mini? I'm telling everyone to trade the micro instead of the mini, because the mini is 10 times the value, right? Or 10 times the money you make. Some people like it because it's like, oh man, instead of one contract, there's 1 point move, instead of making $5, I could have made $50. Yes, but remember, in trading, there's also risk. The higher the reward, the higher the risk. So if you do not know how to actually identify where to buy, where to sell, because you still need to understand trading, you should not be trading something that is that wild in regards to risk. Because one contract, 1 point makes you, $50. 2 points, right? This movement from 2,800 to 2,802 would make you $100. How about it doesn't go in your direction? If it goes against you, you lose $100 or you lose the $50 for every point. And this is a market that right now, in the present year that we're in, this is being recorded in 2025. this S&P 500 futures market in regards to points, right? Handles or dollars that it goes up and down on the day, it's moving about 80 to 100 points a day because of how much volatility we're having this year. It's a lot of points that is moving up a day. So an example here, you bought one contract, let's say the micro, you caught it at a really good price. You said it was going to go up and the price was really good. And the price on that day decided to go up from 2,800 to 2,860. So that was 60 handles, 60 points. So one contract times 60. But remember, what does the one contract pay you? $5, right? So one contract equals $5 times the 60 points. Let's say it went up 60 points. How much did you make on that contract? Because you chose the right direction. You chose to go up and it went up in your direction. So that's 5 times 6. You just made $300, right? 5 times 6 is $300. Okay, that's a really good day with just one micro. If it would have been a mini, it would have been 3,000 because it's 50 times 60. It would have been $3,000. If you were wrong, right? If you were right, oh my God, you made 3,000. But if you were wrong, you would have lost your account or a big chunk of your money. That's why I say for anyone who's new, stay away from the minis. When you're more advanced, more knowledgeable about looking at the technical charts, understanding how news impacts your trading day, okay? And you have more experience under your belt, then maybe you'll switch over to the mini. But as you're getting started, as a new person getting started in trading and actually starting the right way with futures, start with the micro E mini S&P 500. That way you can position yourself. You want to make a little bit more money with the micros, you can do too. I personally myself do not let, or at least like to impose on my students to only trade max 3 micros per day. You can scale in, you can buy one, you can buy the second one, you can buy the third one, but because you're new, try not to actually go over the 3 because you're leveraging a lot on a market that moves so much on the day. All right. So that was it. This is the video that I wanted to make in regards to your introduction to futures trading and what my recommendation is to trade. You can trade gold, you can trade all these things, but I do not want you to go do that. I want you to become a master of one. Master the S&P 500 micro E-mini future. Understand how much you can make per contract that you purchase, and then take advantage of the play that you're looking for. If you're already a trader, if you want to learn how to trade, again, I'm going to leave you the link below to the website, www.daytradingwolf.com, or you can even visit me on my social medias. I'm also going to leave them there behind, or I'm going to leave them posted here on the video. They're both Instagram and TikTok. I have a new TikTok. They're also Day Trading Wolf. If you want to go ahead and follow me, keep up with what I'm teaching, and then also subscribe and like. If you like what you saw in this video, subscribe because I'm going to be showing more videos, and then like, right? Let the algorithms share the knowledge with people who are looking for this information, and also share with your friends. Okay, that's it. Don't want to make it any longer. I'll see you in the next video. Have a great one.